Good evening, Nick Inman from VolumeProfileTrader.com on Tuesday, August 21st. And it finally appears that we see some type of topping pattern in the S&P. Finally, a sign of weakness, a sign of selling pressure, of pushback from the sellers. And it just happens to be, sure, the market touched new intraday highs, but it's at the levels where we saw selling pressure earlier this year. So as I zoom in so we can see this more, and I'm just going to look at the recent rally, you can see we made a series of higher highs, higher lows, and you can also see that market went up, down, up, down, up, down, up, down, up, and it was like a prolonged uptrend that just kind of trickled sideways to the upside, and then we kind of have like a blow off top here and coming back down. So I think you can use these highs as a reference from the sell side if you choose to speculate to the sell side. However, I think this is a time to protect profits versus looking to get short, and that's all I'm going to kind of leave it at. Looking at the hourly chart, and I see this is a mess right here, but I'm just going to connect the lows here and connect the highs. And what I see is a bearish wedge pattern forming, and it'll come to fruition basically if this average true range stop gets taken out, this blue line, and you can see it was pierced. I'm going to zoom in a little more. I'm going to do the monthly profile. Okay, it was pierced today, but we closed above it, so it's still valid, and showing you that the relative strength is still there. But I do think this is an area to look at as far as let's look specifically at these price levels, 1411 to 1415 or so. Keep an eye on those levels. If we fail from those levels, which kind of looks like we are, then you look down to 1404, down to 1394, 1395 or so. 1400 is the point of control for the month of August. That's something to be aware of. Also, be aware of, we've made, I guess we'll count this as 1 month just because the point of control is at the same level. But we've had 2 consecutive months of higher point of control. So that's good, obviously, from the buying standpoint. And if price holds 1400, this high volume area here, then you can still look to be a buyer on weakness, but your expectations are this 1424 level. I think that there will be people, traders, speculators who are willing to step into the short side here, especially the way the market reacted today. And they'll look to try to press this market lower. NASDAQ, 2766 to 2780, we held those levels. But I wouldn't put too much emphasis on it as far as, hoping that it makes new highs. Obviously it could, but the chances that it will, I don't know. One thing, Apple pretty much led the market lower today. Big volume today. I'm completely flat on Apple now. Took profits around 660 or so. And, happy to do so, happy to, unload that risk, can always get back in. But just looking at what Apple has done, we basically had a prolonged base that lasted a couple of months, actually like 6 months. And then we just recently broke out on light volume. The last couple of days got heavier as we made new highs. And now we're seeing a pullback. You know what this kind of reminds me of? It may not be the same, but I remember back on this day, I thought Apple was for sure topping out. And then the next day, sure enough, you got a, closed higher. You had the ability to define your risk, putting your stop below these lows, and it kept going to the upside. So I guess you don't rule that out, but I don't think it's a bad thing to look to take profits on anything, especially if it's starting to struggle. All right, I haven't been around, been at the beach, so I came home. Well, I was tracking my positions on my phone, but I came home to see what they were looking at, what my account was really looking like. And a name like Dow, the spread that we bought, the 30 by 32 call spread expiring in September. One, we still have time for this to work out, but it does have some good gains in it, actually. About 30% gains, a little more than that, actually, I think. So don't give those up. Put your stop at break even. And, if it continues higher, then let it do so. But don't, if it's not giving it to you, then don't let this turn into a losing trade. All right. Las Vegas Sands. This was a name that if I was around the computer today, I probably would have taken profits on. As long as it holds 42, I'm okay with this. It basically traded down to there today, held it, so I'm going to be keeping an eye on that. But this spread, which we bought back on the 16th, is still worth over 100% as far as in gains. Let me get the exact amount really quick. About 112% in gains, which isn't bad at all. However, it was, and this is a little bit frustrating, if I recall today, it was trading over 150% profits today. So that would have been my profit-taking area. However, let it do what it's going to do. It just punched back into this high volume area here. I like, we have time for this to work out again. We paid 75 cents for a $2 spread, so we can almost triple our money here. And we're just at a double and then some. So I would definitely put your profits in the 50% zone, and as far as your stop, and kind of let it go from there. All right, gold. I think you need to be long gold. It just broke out above its point of control for the year today. I bought more yesterday, announced it on Twitter, got paid for doing that today. I no longer have a hedge on gold. What I'm looking to do actually is look at, it's trading 158.83 right now. On any weakness, like a push down to 158 on GLD, buy the 158 by 160 or 161 call spread expiring September maybe, and looking for more upside on gold. Saw pretty good volume today, and that's what you want to see. Silver pushing up to this resistance zone here that I drew back in June, I'm sure. It's holding for now, but yet again, this is 31 plus is what this looks like it's going to. So don't let this get away. On any weakness, look to buy silver, look to buy gold. Just to show you, copper, point of control for the year. This looks like it wants to take a leg higher. Freeport, you definitely should have been out of this trade yesterday once it closed higher. Shorted it, once on the 16th. That didn't work, stopped out for a small loss. Entered back in on the 17th. It worked for a little bit, ended up getting stopped around a break even towards the end of the day yesterday. And, glad that happened because huge gap higher today. And looks like it wants to, it's failing against this moving average here, the 233. But it looks like 38 to 39 or so is in its sights. We'll have to wait and see. So really, despite the fact that this market looks toppy, and it really does, there is no reason why the market couldn't pull back down to 1370, 1375 or so. Nothing would be wrong with this. And then you would look for new highs. And I think that's important. I think you need to realize that the market can easily pull back and nothing would be wrong. And protect yourself because there is that possibility. Markets go up, markets go down. And, it looks like we're in a stage where the market could pull back here. One way I'm playing a pullback, and I did this, I think, on Friday. I know it was last week. 68 by 67 put spreads expiring this Friday. I bought them between 25 and 30 cents. I don't remember the exact price. So I can essentially triple my money on a hedge if the market does pull back. we'll have to wait and see. Basically, if it breaks these lows, there's a good chance that we'll go and test 67 by the end of this week, 3 days, which would be a good situation for those for that put spread. All right, ConocoPhillips pulling back, value area high for the year, a little bit of resistance here. Just be aware of it. If you want to buy some protection, I would be selling 57.5 calls and 57.5 by 60. So I'd be selling the 57.5s against, for every one contract you sell at 57.5, you better own 100 shares of ConocoPhillips. But I would be selling the 57.5 calls and buying the 60s against them. So essentially, that protects you, gives you a little bit of downside by collecting some premium on those 57.5s, and it's still wanting to be involved, but not wanting to get out of your position. So really, that's it for the most part. I guess we'll look at the euro. Surprisingly, the euro had a pretty good day today, and the market didn't comply, the S&P. So that's a little bit of divergence, which we haven't seen, but you just want to keep your eye on it. Really, I'm kind of, when you step away from the market from a couple days, you kind of get out of sync. I have not looked at any intraday price action yesterday or today, so I'm not. Actually, I did look at today's. I saw the reversal. But the levels we talked about on the hourly chart on the S&P, keep in mind what those are. 11 to 15 or so. This trend line, which is creeping, tomorrow will be around 9, let's call it 8 to 9, 1408 to 1409, that is. And then from there, if you break those levels, 1404 down to 1400, and then down to 1395, which is also the bottom of the channel, and this exponential moving average here. So those are all things to keep in mind. I think that the chances for a market pullback are there. It may not happen today or tomorrow or Thursday, but eventually it should. And if it doesn't, that's why you stay involved. That's why you trail your stops. And once you get hit on your stops, then all of a sudden you have more cash. And as the market pulls back, you'll be able to deploy that cash back to the long side, if and only if the trend remains up. So anyways, take care, have a good night, and I'll talk to you tomorrow.